with me today is Paul Carroll, who's the CEO and founder of Avion Wealth with approximately $850 million under management.
The secret to the success was we were not sales oriented.
What are some timeless mistakes that you'd like to share with the audience and how to avoid them?
Emotional decisions that are not made in a strategic and deliberate fashion. Why we fail to make good decisions is we're afraid of the outcome. We're afraid of failure. To me, failure is not that it didn't succeed, but that it didn't succeed and you didn't learn a damn thing. Now that is failure.
What's the best piece of advice you'd like to give the audience or your 30-year-old self? And welcome everyone to another Smart Money Circle episode. I'm Adam Sarhan. With me today is Paul Carroll, who's the CEO and founder of Avion Wealth with approximately $850 million under management. Paul, thank you so much for taking the time and welcome to the Smart Money Circle.
Thank you, Adam. It's a pleasure to be here.
So Paul, I always like to begin. Can you please tell us a little about your story and how you got to where you are today?
Sure. You asked for it, you're going to get it. So I was born in Dublin, Ireland, raised in London and Manchester, England. And at the age of 17, fall of 1979, I came to the United States with $200 and a toothbrush. I had no idea what I was doing, but at 17 years old, who really cares, correct?
Correct.
I got here, and within a couple of years, I ran out of airspeed, altitude, and ideas and enlisted in the Air Force. Used that as a platform. I went to University of Maryland while enlisted in the Air Force. Got my 4-year degree in business management at about the same time that I completed my tour of duty. So with that wrapped up, I'm still a stranger in a strange land, didn't know what to do next. So I did what you do when you don't know what to do next. I went to graduate school. Texas A&M made an offer that no normal man could refuse, especially if they're trying to figure out how to pay for this stuff. And in one of the best decisions I ever made, I took them up on it. I graduated from Texas A&M with a master's in finance, and after a couple of false starts, found myself working for Smith Barney, the old stockbroking firm that has been merged many times since. Smith Barney was an interesting experience. It was mostly dialing for dollars. It was a bit of a disillusionment for me. I didn't get the mentoring that I maybe could have used. That would say, "Hey, hang in there. You can write your own rules if you stick around long enough." Which is why mentoring is so important for me with my team today. After Smith Barney and that disillusionment, a good friend of mine said, "Hey, Paul, the airlines have a pilot shortage. Let's go learn how to fly. It can't be that hard, right?" About when I was ready to start that career track, and I'd finished that flight training and spent years and hundreds of thousands of dollars, the industry had entered the deepest and longest hiring drought since the Wright brothers, and hadn't experienced anything since to this day. 7,000 hours and 7 jobs later, I got hired by Continental Airlines in December 1997, and life was great for about 3 more years. And then, of course, September 11th struck, blew a hole in the side of the airline in my career. I was based in New York City, flying out of Newark Airport. So Continental Airlines was very kind. They involuntarily moved me to Houston, Texas on my dime. And then a few months after that, subsequently told me I was going to be furloughed. And that was the impetus for me to come up with an alternative business idea. I wasn't planning on quitting the airline so much as I needed a plan B. I mean, an airline job is a lottery job. It's once you're in seniority, and you have zero control over your life in terms of how old does the airline do, how does the industry do, how does seniority progress, things like that. Took me a little bit of time to really make a decision, but I decided I'd start a wealth management firm. I had no clients at all. And frankly, though I knew my investment theory pretty well, I've been a student of it for a long time by this point, I didn't know the first thing about running a business or a wealth management practice. And it was an exercise in turn the dials, see what works. It was a slow burn at first, and then we got traction, really hit it off 2006, 2007. It was off to the races, and we were getting inbound calls. We were having enormous success. And I think the secret to the success was We were not sales oriented. We were very much oriented around being a professional company that not only helped our clients protect their wealth, but also mitigate their taxes, take care of their heirs, protect their assets from being unjustly taken, and maximize impact of charitable planning if that's important to them. That focus on professionalism, letting the business sell itself through reputation, once it got traction, worked really well for us. 20 years later, it's our 20th anniversary actually right now. 20 years later, you'd safely say we're a 20-year overnight success. And I love it. I love what I do. I love the fact that my circle of friends, most of my friends are clients, slash, most of my clients become good friends. I love the team. I love developing people. I love doing what I believe is a great service, not just to the clients, but to the families that work for me and work under me, and the community that I'm working in also. So
Wow.
that's how we
Well,
got where we are today.
absolutely love your story. From immigrant, came at 17, no money, moved around, you found opportunities. Thank you for your service, by the way. And then you went to the Air Force, came back, and then airlines, and then came back, and you found yourself. You started with Smith Barney, you left it, and then you came back to it. And now you have your own better version of it. And what a great story! Absolutely love it. So let's talk
Thank
about
you.
your investment strategy, Paul. What? How do you about your business and your investment strategy?
So, as a wealth manager, investments are just one of the five legs that make us what we are today, but they're a very important one. That's where the money comes from that helps us afford to do everything else that we do so well. Our investment strategy is foundationally built around modern portfolio theory. I'd like to say it's a little more sophisticated than MPT 101. We have a value bias. We're not deep value, like say dimensional, but especially in smaller markets, less efficient markets, there still seems to be a modest value premium. We try to harvest that. We build the asset allocations. We customize them as needed for the client, as our clients are often large and often have significant individual holdings that, for whatever reason, be it capital gains or some other reason, doesn't make sense for them to sell. So we'll customize those portfolios around an asset allocation that works for them, works for their risk tolerance, and meets their needs.
Love it. Absolutely love it. So let's speak about risk management. How do you handle risk, and what are some mistakes people make with respect to risk management?
Well, arguably, I read your book. I loved your book, but
Thank you.
arguably the best book I've read in the last 18 months is this, The Missing Billionaires. It's a bit of a textbook. It's a fantastic book, and it talks about that subject. And the premise of the book is if people didn't make mistakes, there'd be actually probably 10x the number of billionaires, and same with millionaires as there are today. And it really gets into what are the biggest mistakes. And frankly, the biggest mistake is overconcentration of risk. The and usually that concentrated risk is very highly tied. And this is where psychological analysis adds so much value. It's very highly tied to belief. You work for
Mhm.
ExxonMobil, you believe in ExxonMobil. You work for Boeing aircraft, you believe in Boeing aircraft. And Boeing's a good example of it doesn't matter how much you believed in it, things went wrong over there. And if you had a lot of money invested in Boeing, you saw some of that wealth get wiped out over the last 5 years. As financial specialists, we talk about unsystematic risk and systematic risk that can't be diversified versus risk that can be diversified. But in English, it's if you believe in something, that's very likely a dangerous belief. And having too much risk, the book really talks mathematically about nothing should have more than 5% of your wealth wrapped up in it. And I agree. It's a great book.
Wow, that's fantastic. So from a risk standpoint, you make sure that you don't have one asset class that's over invested. This way, if something bad happens to that asset class, the overall portfolio is protected. Is that correct?
Uh, That's an interesting. I'm less worried about the asset class, though we're very sensitive to asset class valuation, and more worried about individual. Like, is it all in
Oh,
one stock, or is it
okay.
all in I call them golf course investments. Did someone you're playing golf with introduce you to this real estate development, and now you've got mm, too much of your portfolio invested in, and it can work great. If it works great, your returns are going to be fantastic, but they're not going to be so good that they justify the wipeout that they could and that you would encounter if things go south.
Understood. So
I'm not opposed to alternative investments. There's almost no investment that I'm quote unquote opposed to other than fraudulent ones. Um, it's just, hey, you got to limit your exposure. Or,
yeah,
one of my favorite quotes is if you can't do the time, you can't do the crime. And
right.
boy, is that true in investing.
Mhm.
I don't care how much you believe in it. It's not, belief does not guarantee success. And if you can't take the downside, you can't afford it.
Yeah.
It can be the best thing in the world. If you can't afford it to go wrong, you can't afford it.
I love that. That is so powerful. So thank you for clarifying about the 5% and the risk side of it and for the book recommendation. So next question for you, Paul, are what are some timeless lessons you've learned along the way that you'd like to share with the audience?
Um, Immediacy is probably in one word, and I would wrap that in two directions. When you make a decision, once you've made an intelligent decision, and maybe we'll talk more about that, act on it. Do it now. There's that famous saying, when's the best time to plant an oak tree? 20 years
Right
ago,
now.
right?
Yeah, exactly. Yeah. If
What's the
not right
second best
now.
time? Second best
Exactly.
time is now. And to do it. And also, we get married to our decisions. And I'm human. I've learned this one the hard way as a business owner. And this can be employees, this can be personal relationships, it can be investments. Once it's clear that it's bad, get out, eat it. Just eat it. Just we have a loss aversion that causes us to hold on to bad employees, bad marriages, bad investments, you name it. As soon as it's clear, eat it. And the reason I say that is about when it's clear to you, it's already way past the past due date for that idea, that relationship, that investment. So as soon as
Love
you're
that.
having that thought, assume the world has already decided for you. You need to be out. You need to quit trying, walk away.
Absolutely love it. How about the other side of that? Some mistakes, timeless mistakes that you'd like to share with the audience, please, and how to avoid them or learn from
Um,
them.
well, it comes back to the missing billionaires a little bit. I'll share my own. Um, I think what makes us good wealth managers is we're human and we know it. We've also paid tuition. And, I like to say everything in life, you either succeed, you learn, or you fail. And failure is failure to learn. But emotional decisions that are not made in a strategic and deliberate fashion. Ray Dalio talks about this a lot in one of his books, and I love it. Arguably the best book I've read on the subject, the book called The Road Less Stupid, which
Love
is
it.
as interesting and well written as the title. And he basically has a template, for want of a better word, to make these important decisions and make them logically and make them with the input of others. And most important, I think the step that's most missed, I have a whole file of them. Keep that decision and look at it a year later rather than move on. Even though you can't undo that decision, you need to look at it a year later, go, did it work? If it didn't, did it fail within the parameters of what was acceptable? And what can we learn from the experience? I'm going to use a term from Strategic Coach, and I want them to get credit, but they talk about the experience transformer. Every event we have, every book we write, every project we engage in, we pre-schedule time to discuss as a team when it's all over. All right, what worked, what didn't, and what can we learn from it?
Love that. Let's go back for a second to the succeed, fail, or learn. Can you explain that again, but slower, and then explain what it means? Because I love
Well,
that.
not everything works, right? And I think one of the things that, and it actually, one of the earliest things I heard was the term fear stands for false evidence appears real.
Mhm.
One of the reasons we get paralysis by analysis, and I've had it in the past, why we fail to make good decisions is we're afraid of the outcome. We're afraid of failure. And I think one of the best ways to deal with that is to reframe failure. And to me, failure is not that it didn't succeed, but that it didn't succeed and you didn't learn a damn thing. Now that is failure. But if you've made a smart decision, you have to understand that it may not work. And if you had a good plan B, good plan C, and you learn from that experience, okay, you've paid tuition, but paying tuition is not failure.
That is so powerful. So what you're saying is that failure is part of the process, assuming you learn from it. But if you don't learn from it and they keep repeating the same mistake over and over and over again,
Yeah, that's failure. That that
exactly.
that's a waste of time and resources. Otherwise, but if you learn, it's tuition. That, some of us have paid some pretty large tuition checks over the years.
Myself
Right.
included, by
Me too.
the
But that
way.
makes us better professionals, better humans, better wealth managers.
Love it. And the final question for you today, Paul, is what's the best piece of advice you'd like to give the audience or your 30-year-old self?
Well, if you're familiar with the term, I'm sure you're all hedonistic adaptation. It's sort of core. And hedonistic adaptation in English means it doesn't matter where you are in life, you will get used to it and you will want more. And understanding you can't win that race. You can't win keeping up with the Joneses. You your Jones may be Bezos and Bill Gates. It doesn't matter. There's always going to be someone that has got more, who apparently has a better life. You cannot win that battle. What you can do is you can live life in the here and now. That doesn't mean recklessly never planning or looking. It means you get that plan in place and you put it on the shelf and you live by it, but you live today. You take time off to enjoy your and care for the people you love, your family. You travel. Don't wait for retirement. Yeah, one of the saddest stories I heard, one of my clients, um, maybe 3 months prior to retirement, got an aggressive brain cancer and died.
Oh,
He
sorry.
had done nothing. He had saved so that once he retired, he could travel nonstop.
Mm.
Didn't happen. It's an awful story. And live now. Doesn't mean don't work, but but finding that balance is difficult, and you've got to do it.
That is some really powerful advice. Well, Paul, thank you so much for coming on the show. We have a link to your website and anything else that you want to share in the description. And hopefully we'll have you on again soon. This was absolutely fantastic.
Adam, thank you so much for the opportunity. It was great meeting you, getting to know you, and I really enjoyed your book.
Thank you kindly.
Take care now.